Ira Epstein of Linn and Associates with your weekend edition, and this is all going to be weekly charts on your metal markets for Friday. And we are now at the 8th of January 2021. It is the weekend. We're into the evening already on Friday. I'm very glad to be back from Mexico. I had a ball. Let me tell you, the Mexican people, I didn't see anybody without a mask or washing their hand everywhere I went. And it was just phenomenal. The only people I saw that weren't doing that, I hate to say it, were Americans. That was about it. The airplane, you can't get on without that. And my wife has the scrub stuff, so our areas are super clean. Rooms are super clean. It was a ball. Eating out, they're taking your temperature. They're washing. You got to wash your hands with that stuff before you can get in. Go to a local store. Go for a coffee. It's all the same. There is somebody there waiting for the temperature and the other. Don't even think of taking that mask off. I felt very, very good. Food was great. Temperature was wonderful. So what about the markets? Not so wonderful today. Look at the size break in the silver market. You'll see where the market was at. If you're my subscriber, by the way, all my subscribers to my morning subscriber video, you know I put them out each and every morning, even on vacation, so you got your money's worth. Gold down $80. This is all happening. Is Bitcoin basically stable? It did get over $43,000. So if you think it's for the faint of heart, it isn't. Look at the range, $6,000 almost today. Wow. Now you understand why it doesn't get a lot of interest in it in terms of the futures markets. I'm not saying people are trading billion now a day of value. I think they're doing beyond that. But the reality is the futures contract is the wrong size. The Merc doesn't have to agree with me, but it's not a popular contract for that reason. Just simply 5 Bitcoins is too much. Go to a small contract. You'll grab the volume. Ethereum's coming up. We'll see what that does. But as you can see, most of the metals down as the dollar got a rebound and interest rates have been climbing up. Energy prices still going. What did we see? We saw the Saudis unilaterally decided to cut 1 million barrels a day going forward as long as their other OPEC members in Russia don't cheat. Wow, I didn't see that coming. I thought they'd wait to do something at the end of February before they did an increase of any type. Not so. When we look at a monthly chart, you can't get away from the fact that you got lower highs, and you had them prior to even this week. You had lower highs, lower lows on the monthly chart. This is December 31st. So can't get away from that. Are you getting away from the fact here? And you got to look at this. You had an embedded reading and you lost it when the red line closes under 80. Now, this doesn't always mean it works. Believe me. The longer you go out on these charts, my rule of thumb has less credibility than it does on the shorter charts, the daily and the weekly. But when that's lost, if it's not gained back right away, which it wasn't, well, then I'm looking for a challenge potentially of what? It could be going back to that 1703.5 level. Do I think so? I don't think so, but it can do it. What the market's certainly doing is it's still overbought. Any reading over 70 is still overbought. When we come to a week chart, take a look at where this market went to. This is the 18-week moving average of closes. What do I call that average, be it on a daily chart, weekly, or monthly? The line in the sand. That is the neutral number, and from there, trends develop. So all the market did, if we take a look at it, it got up there December 31st, and now this is what the market's doing right now. It broke back down from there. If you take a look at this chart, look at this failure that you had on the weekly bar chart. If I take a look at the chart, you now have a pattern of a higher high, lower low. You are not in a trend at this point. If you look at the 18-week average of closes, and let's just take off this week, you've been fighting there for 3 weeks. Again, the line in the sand. You got up early in the week higher, and what did we have? We had the questions about the riot in, obviously, Washington, D.C. We didn't know who was going to take control of the Senate. Would the Republicans keep it? It turned out to be wrestled away from them. Now there's impeachment talk. I can go on and on. You had your big up and now down. Important. And you took out a previous low. So I always pay attention to that. Did you make it to the upper Bollinger Band? Nope. Have you made it so far to the lower band? Nope. So you got your 200-day average, you got your 100, the 18, and you're stuck in those bands, but you're not really hitting them right now. What about momentum? Well, it had been pointing up and now it's drifting back down. You could easily go back to 1884 and just play around here. What else on this chart? You didn't have an embedded reading to lose like you did on the monthly. So all that the monthly chart is showing us is that's being lost, is that momentum to the upside was being lost on a monthly basis, and you're seeing it better here, and you obviously see it even clearer on the daily chart. The gold-silver ratio probably got a little too cheap here. The bounce coming. Could you get back towards the 76 level? Yeah. But again, that's that line in the sand. I'd look for the market to have problems there. What did silver do this week? When's the last time you hit an upper Bollinger Band? Way back here in August, September timeframe, right here. What do you do the first time you hit a Bollinger Band? If you don't get it, I tell it to you over and over. I say the smart money, quote unquote smart, they've built in that you only stay 5% of the time over or under a band. They're taking some money off the table. The key word is some. I don't know if they took it all. I don't know if they took any. I think that's what the smart money does. My traders know that if you do that, I tell them you got to move a stop up dramatically. Dramatically, not giving the market much quarter, because the odds are you can enter more of a correction. And that's just what you did. Silver hasn't fallen apart, but you ended that up leg. Now you got to see what the next leg of the market is. Copper, what did you do after a 2-week hiatus from running the Bollinger Band? You came back under it, you go back to it, and what are the pros supposed to do there? Out you go. You have the embedded reading. I get it. Doesn't mean you can't buy the market on breaks. But if you don't do these things, and I'm not saying you have to, believe me, but if you don't do things where you learn to cut down positions when you hit key resistance points and you just want to play for the Bitcoin events of the world, God bless you. I'll take the other place. What about platinum? Same thing. You got up to the upper Bollinger Band, you fell back to the 18-day average. It's not been a trend, I can say that to you on the weekly chart. Now you're back up to the band. Did you hit it last week? Last week you got to 1080, 280, the band, Bollinger Band was 1090, 30. You hit it this week. What are you supposed to do? Away you go. I'm waiting on the pullback. We'll see what's going to happen in the market. What about in this dollar index? Okay. You've been coming down, riding the Bollinger Band. You get under it, you go back over it. You get under it, you go back over it. Under it, over it. And you're embedded. That is bearish as can be. I think the pros are still going to sell the rallies, and they'll stay that way, coming out at these bands, putting them back out until that Bollinger Band red line closes back over the 20 level. So, an interesting time, yes. A time that you have to learn a trading discipline? Absolutely. And that's what I try to offer you each morning. At 5:30 or so in the morning, I'm recording. And in that, I'm giving you all my trade ideas with the charts, because just about every market is open, as you know, at that point in time. And we're going through what it is. I've decided now to do my Spider ETF subscriber video at 8:40 in the morning. Why? Because they're all open and I want my traders to get the same thing. So I'm leaving the afternoon Spider video, going to the morning edition. Same theory. I'm going to cover everything. It plays in your smartphones, Android and or Apple. Each of the video, I'm going to give you the news. I'm going to cover the markets in this exact sequence. There's a slide bar even on our website. You can get right to the area you want, or you can watch them all. They are full of trade recommendations and the news of the morning. What is moving the market? $7.95 for the first 30 days. Price of coffee. I went away on vacation. I still put out the videos, 26 of them a month. Each one approximately 20 minutes long. You're getting more than your money's worth. Start your year off. Go to our website. Look at the word research. Sign up right there. I'm Ira. You have a good day. I'm glad to be back. I'll see you all come Monday.